All right, we are live. Good morning, everybody. Welcome to the morning show here on Stock Market TV. I'm Spencer. You've got JC and maybe one Steve Strazza. We'll find out in a second. We got a lot going on today. Busy guest, a busy day. Two guests on the show: Jason Krutzky from Trendspider and the one and only Kenny Glick, aka the Warlock, will be joining us at around 9:35 or so. So if you're watching us on YouTube, watching us on Twitter, watching us on stockmarkettv.com, hit that like button wherever you are, please, and thank you. And let's roll.
All right, I got a question to start out today. So the S&P 500 has returned over 20% this year. The Dow Jones Industrial Average is 2% from new all-time highs. The NASDAQ 100 has returned over 46% so far this year. Yet, investors are very sad. Can you throw up that slide? Why are investors so sad, Spencer? You're a man of the people, right? A man of the people. You're not jaded like we are, right?
Why are investors sad?
Yeah, I don't know. You keep it more real than we do. We're like jaded. We're like in our charts. We're data driven. So like we don't understand why people are so sad, considering so much good news.
They should be happy. It's the holiday season. I don't know. I don't know why. Maybe because scars last a while, and the scar of last year was the worst year ever for the 60/40 portfolio. So
yeah, but what idiot thought that the 60/40 portfolio was a good idea?
I've been wondering that myself a lot. Actually, I wonder where that came from. But in any case, scars last, man. Scar tissue is a thing. So
the back half of last year was a great back half of the year. So we're like almost a year and a half into this bull market. Yet people are very sad, Spencer. They're very sad.
Wait, yeah, they are sad. I'd be a little happier though if we had Steve Strazza on the show. Can we bring Steve on from the Black Void or wherever he is?
Is he ready? Is he ready? The Strazzanator? Is he back from Miami? Look at this guy. It looks like Strazza's shooting a documentary, but like,
you like this?
It's like he's shooting a documentary, but like the Blair Witch Project kind of.
This is my new office. We decided to just go all black.
I like it. It's better than like, the Jeremy Shockey photo in the back with like the dentist green coloring. Although, I did like what you did there. I know you're not smart enough to have done this on purpose, but the green, that mint green you had going on before, that is the same color as the bathroom of the New York Stock Exchange.
Oh, yeah.
The New York Stock Exchange is so old,
Well, I'm glad we're doing this, that you're complaining about my green again, because it's the last chance you're going to have to complain about it. It's gone. It's actually right now. There's a green wall in front of me, but it's white behind me.
Wow, look at that. Look, it does look like he's doing voiceover work.
I'm working from a work zone here today.
Yeah.
I think it looks great. It's like you're coming to us from like a black hole or something.
It does. It is like a black. Yeah.
It'll probably be one and done, but I'm glad you guys like it.
We do like it.
We'll bring this back.
We do like it at all. Can we, Strazza, you were in Miami this weekend.
Mm-hmm.
Why do you think that people are so sad?
The people I was with in Miami were very happy. They love crypto. Crypto is back.
Who are these crypto people you were hanging out with in Miami?
Can't really say. Old friends.
Okay, all right. Can't say. All right.
Yeah. They do like ICO things, really like the real junky stuff, right? But just to know that those parties are happening in Miami again, very interesting. It's almost like they never went away from my conversations. So in the crypto community, I don't think they're very sad. Like me and Louis were actually talking about it yesterday. I don't think it's a bad thing that they're so laser-eyed on their views. Like, they're going to be here. If it's a bull market or a bear market, like they believe in this thing. from a sentiment perspective, we always kind of laugh about that. But like they're always willing to be incremental buyers. Some of these crazy crypto folks. The stock market is a little bit different.
Throw up the slide there, Spencer, while Strazza weighs in here.
And I have a slight bone to pick. I don't think it's been great since last year. The end of last year was tough for most people still.
The back half of last year was great, dude.
The NASDAQ bottomed a couple days before year end.
Right, but everything else bottomed in Q2.
The NASDAQ 100 is the best illustration of most people's portfolios.
Most people's portfolios underperform.
Oh, the NASDAQ 100 was underperforming last year.
Right. So that's why you think people are sad, because the NASDAQ 100 this year is up only 46%?
No, I like what Chris said in the chat.
No.
People are sad because they missed it. That's it.
That's usually it, right? Isn't that usually the answer?
I don't think FOMO is a reason to be pessimistic, right? Like historically speaking, you know, we look at sentiment, and by the way, there's no like exact science to this, particularly in sentiment. Certainly market analysis, but particularly in sentiment, there's no exact science. But I have not noticed in the past that after historic runs that historically most people miss, that's when you get the pessimism. Usually the pessimism comes after big declines. No.
So why do you think we got such a strong reset? Was this summer that bad for people? Because you're saying they're sad. Well, I mean, look at the way that we rocketed from risk to opportunity in the sentiment indicator in the lower pane.
Yeah.
It just moved back to that situation back in July.
After like a perfectly normal seasonal correction. Like couldn't have been more normal.
Are all the sentiment indicators showing the same thing? We didn't get retest.
No, this one also. So this includes AAII. It includes Investors Intelligence, which is advisories. It includes the NAAIM, which is active investor managers. VIX, put call ratios. It does not include consumer sentiment, by the way, because consumer sentiment is pretty slow. So this one's a little quicker. Consumer sentiment still down in the dumps, down near the lowest levels ever, and consumer sentiment data goes back like almost 100 years. It goes back a long time.
That's a different data set, though. That's a different kind of sentiment.
No, agreed, and it's slower. It's much slower. So we don't. But just to reiterate, like as bad as that one is, it's not even in this composite. So like it's not like one data point is suggesting that people are sad. Like people are sad.
And which one's the exposure index?
The NAAIM.
NAAIM.
Which, by the way,
that's the best one.
That's the one that tracks the cues the most.
Yeah, it's the best one, right? All right, so let me throw it to you. What is the best sentiment data set, and what is the worst, in your opinion? And you can't say fear and greed for the worst.
It's the fear and greed is so bad, it's not even the worst. It's just malicious. It's, you know, it does so much more harm. Like it's just whoever created that formula does not understand the market at all. More than half of the data points in the CNN VIX fear greed index or whatever are trend following indicators, not contrarian, right? Like so.
Yeah. No,
that's not even in the conversation because it doesn't even qualify. It's just a disaster, whatever that is.
So what would you had to pick a worst? What would you pick?
A worst?
He's like, they're all so bad.
None of them are great. That's why we have to aggregate them all. None of them are great. You know, the AAII is really fast, right? They're the ones quickest to the trigger. The advisories, listen, they're all good and bad in their own ways, which is why I think that aggregating them all is the best path. And you know, we're not the only ones that do this. You know, those that came before us have done, you know, some of the best analysts and traders in the world have done this before, you know, which inspired this aggregation of ours. It's just really interesting that as amazing as this year has been, I mean, the NASDAQ 100 is up over 46% this year. S&P is up over 20%. Dow's 2% from all-time highs. And yet sentiment is very, very pessimistic. Fascinating.
Since you punted on my tough question, I'll throw in a hot take about what I think. I think the ones that ask you how you feel are far, far more inferior to the ones that ask you what you did or what you're doing. It's very simple, and it's in the way that they ask the question. I think what is it, the independent investors, or it literally just says, "Are you bullish or bearish?" That's crazy. That's crazy. People are going to say anything. They're going to say whatever the last phone conversation they had was.
Yeah, and in general, like sentiment polls that don't have a time horizon.
Yeah,
Like, oh, bullish or bearish, like bullish, like in the next month, in the next 5 minutes, like, so, we don't need to call anybody out.
No one knows. No one knows how they feel. I don't even know how I feel, and I'm me.
The NAAIM, I think, has figured out at least something about what they're doing here. They simply say, "What did you do? Like, what did you do last week? Were you net buyer?
How are you positioned?" Right, exactly. It's how are you positioned.
That I like.
It follows the Nasdaq 100 really closely.
I think that one's probably better than the
they're also, it's funny because remember when I was in I spoke at their conference in early May, the NAIM conference, and I asked everybody at the beginning of my presentation, I was like, oh, raise your hand if you think the S&P 500 closes lower or higher than here at the end of the year. Everybody said lower, literally everybody. Right. Raise your hand if you think that we're in a bull market. Nobody raised their hand. Raise your hand if you think we're in a bear market. Everybody raised their hand, like everybody. And then I'm like, well, for the next 45 minutes, I'm going to tell you why all of you are wrong.
Yeah.
And they appreciated it. That was nice.
Yeah.
But they were very on the wrong side. Like, and when I say everybody, it's not like most people have to, everybody.
It was a room of advisors though, right?
Ask Andrew Thrasher. Andrew Thrasher was sitting in the back laughing.
I know.
Because we're friends, so he gets my humor. He thought it was hilarious.
This reminds me of the COVID lows when we had Chart Summit, and we had a very smart pool of people, maybe the best you could put together, answering a survey, and I think 85, almost 90% said we were going to make another low. This was in like March or April after COVID.
Yeah.
When we were Ving higher.
Yeah. I recall. I got one for you. Spencer, hit the bumper.
Oh, okay. Caught me off guard there.
Why don't you throw up slide 3 here while I run down the futures? Dow futures down 20 points, basically flat. S&P futures essentially flat, down 7 handles. Nasdaq 100 down 27 points, about 17 basis points. 30-year futures pretty much flat. Gold pretty much flat. Silver flat. Copper up a little bit. Oil flat. Not much going on. Dollar inching lower with flat rates, and the volatility index pretty flat, under 13. Here we are, Spencer, closing out last week at new multi-year lows, approaching new 4-year lows for the volatility index. Wow. Thoughts on that? Out of curiosity.
To me, I mean, my thought is it shows a quiet market. No, I mean, isn't that what this indicates? That things are ho hum.
I don't know about quiet or ho hum, but it does measure sort of the at the money straddle, right?
Mm-hmm.
Not quite that, but basically the at the money straddle for the S&P 500, which is as cheap as it's been in almost 4 years, right? Yeah. Pretty fascinating. So, it's not so much like, oh, the VIX is broken, right? Because you do hear that. It's not so much that, because by my math, it's working just fine. It's measuring that straddle perfectly. The question is more like, okay, what type of volatility regime are we in? And what do we do about it, right? Like, how do we use this low volatility to our advantage? And we've been doing that, right? Yeah. But man, I do this every single day. I'm analyzing markets every day. VIX pushing 4-year lows. If I didn't know that that's what was happening, I would be surprised, right?
This brings me back to what was it? 2018? I think it was 2018, 2017, 2019, one of those years, right? Where you just went straight up for the whole year.
I think you're thinking about 2017. It was right after the Trump election. Everybody thought the world was going to come to an end because Donald Trump's our president.
It was the most boring year ever.
Well, I don't know about boring.
I mean, it was fun. It was fun to go up, but
It was one of the least volatile years ever.
Yeah.
In a year that everybody said, particularly liberals, were telling everybody how bad things were. In fact, I was living in California at the time, and they were very upset about the whole thing, and they were going to
No
cash
kidding.
at the exact time that you wanted to do the opposite of going to cash. You wanted to be very aggressive. 2017 was a great year. Volatility just completely collapsed all year long. Stocks just kind of trended higher. It was beautiful.
Anyway, that's what this reminds me of, because it's been a few years since we've been down here, right? So,
Yeah, since right
I don't
before
know.
COVID.
Not the most like actionable signal to me, but interesting.
How is this not
nonetheless.
actionable, Spencer?
So, because I don't I don't need the VIX to like tell me if like the market is volatile. You know what I mean? Like you can just see it in the price action. You can just see it in the day-to-day
I
movement.
suppose it's probably right.
So
And we don't trade the S&P 500 like ever. I mean, I couldn't tell you the last time we did anything on SPY or anything like that. And this is a measure of volatility on the S&P 500, but you could see it at the individual stock level, to Spencer's point, and you could measure the implied volatility on an individual stock basis, and you'll see that a lot of them are near or at their lows for the year, which would suggest that incorporating strategies that are best for low volatility regimes are better than incorporating strategies for higher volatility regimes. For example, we're not selling puts because we're not getting paid for it because volatility is so cheap, right? We're not selling strangles because volatility is so cheap. You're not getting paid for it, and it's too risky. So why would we do that? Speaking of riskies, we're not putting on any risk reversals because we're not getting paid to. We are getting paid to be long premium. We are getting paid to be to buy cheap calls because they're so cheap. We can go out so far. We're getting all this free time. Might as well take advantage of it. So there are actionable. So to your point, Spencer, I agree. In terms of the VIX itself, how actionable is it? For us in particular, probably not that actionable, but it is representative of what's going on around the rest of the market. And in a low volatility regime, there are different types of strategies that we can incorporate versus higher volatility regimes. That's all.
Yeah. Like I don't look at the VIX every day. I look at the S&P 500 every day, and I can just see the size of the candles and all that jazz, right? I don't,
You don't look at it every day?
The VIX? Yeah. No. I probably used to. I don't know. It's somewhere along the line. I was like, I don't really know if I need this on my screen, so I took it off.
I look at it. I think it's very informative, especially when it just dropped like a rock. And by the way, perfectly normal. Again, volatility historically peaks in October. Sure enough, this year was no different.
There you go.
Any thoughts there on the VIX, Strazza? You think I laid that out pretty well?
I'll be completely honest. I don't look at it every day either.
Haha.
Sean looks at it every day. I don't know. I look
at it every day.
Well, Sean needs to look at it every day.
I'm looking at things.
Sean does not love the VIX. Sean is more about. I shouldn't say that.
Sean looks at the VIX every day. Sean
does. He complains about the VIX, but he can't live without it. So a love-hate relationship between Sean and the VIX.
In my morning chart review, the first 10 charts I look through, I could tell you what the VIX is probably doing.
Agreed. Yeah, that's right.
And also the VIX is a derivative. It's important.
Agreed. Also a very good point. It is a measure of the derivatives of the index. Agreed. Yeah, that's right. But as somebody who doesn't look at the VIX every day, someone who doesn't overthink the VIX, right? Are you surprised that the VIX is pushing new 4-year lows? I am, and I look at the VIX every day.
Yeah, listen, it's not bearish. And Elliott Wave Cafe, I definitely don't look at the volatility of the volatility index. I mean, we could go all sorts of crazy with VIXs and volatilities.
We'll have Andrew Thrasher. On here, and we can talk about the volatility index of the volatility index of the volatility index.
The NASDAQ VIX, the volatility of the NASDAQ VIX, the bond market VIX, the volatility of the bond
market. It's like one of those mirrors with like two mirrors, and it just goes on forever back and forth.
It's a derivative of a derivative of a derivative.
Right. Yeah. You know, once you get to the fourth derivative, the math is too complicated for me.
Oh god.
No, but Thrasher does a nice job of analyzing the volatility of volatility and kind of looking out. He does a nice job there. Like for me, it's too much for me.
He's the one person I think we know that can make sense of that data and uses it in a valuable way. I think
he's our guy. He's our VIX guy. You know, you got to have a VIX guy. You know, you got to have like a bond guy. You know, we got a few of those. You know, you got to have like your commodities guy, right?
A lot of Thrasher shout outs today. Love Andrew. That's great.
A lot of Thrasher. Oh yeah, because Thrasher was at the end. 2 Thrasher shout outs today. How about that? Thrasher, big wino. Andrew Thrasher.
A lot of you technicians, you know, you're not the only one. You, Dan's a big wine guy. Andrew.
Jeff DeGraff.
Jeff. Yeah, sure. All right.
All right.
Where do you want to go from here? I got other charts to talk about, but I feel like we're going to do guest first, or you want to?
No. We'll have Jason on at 9, and then we have some time. So you guys want to do this online retail theme you and I were talking about?
You got all the charts ready? I think we should look at all of them.
I think we do.
You know, why is Adobe the one counting this stuff now? Isn't that interesting?
No, Adobe does this every year.
Adobe is one of the counters.
Okay.
Yeah. So yesterday, Strazza, there was another headline that we were talking about how it was the best Black Friday ever, blah blah blah. And this morning, Adobe comes out and says it was the best Cyber Monday ever. You know, whatever. I'm actually like more like in JC's camp on this one, where like the headline is probably just an excuse, right? But for whatever reason, all these online retail stocks yesterday, not all of them, certainly a lot of them, right? Shopify breaking out, you know, Affirm, which is a retail stock in a way, right? Breaking out, you know, so yeah, let's pull up some of these charts here because
sitting here before the show and you were saying, I was saying, oh my God, these online retailers had a monster day yesterday, not just Shopify, right? Look at Mercado Libre. A lot of them did really well. And you're like, well, it can't be the Cyber Monday news. You would like to think not, but it is. Right? What?
I think it's an excuse. Normally, I'm the one that says, no, it's the news. But this time, I'm on the other side. And I'm thinking, no, it's. Look, I mean, not every stock is breaking out. So what does that tell you? It's chart dependent.
It's justification, Spencer, right?
Listen, these stocks are up 5-6% yesterday when the broader market's down. Mercado Libre by far the best performer in the NASDAQ 100.
Was the broader market down yesterday?
Pretty sure it was. Listen, I was out there in Miami, but from what I heard, it was down.
Down is probably a strong word.
I think it's also important to point out year over year, there's never been a lower or a down Black Friday, right? Even during COVID, throw up the charts. So my point is, every
COVID,
year,
everyone was buying. Everybody had money.
No, every year it's a new record, right?
Yeah, there's never gonna be ever again, especially now because Black Friday isn't even a day anymore. It's the month. It's a whole month. It like the companies have said so. Target, Macy's, the CEOs, they said so, right? Black Friday is a multi-week thing now.
Yeah.
So just spread it out over the course of a whole month.
Yeah, show this one first. Right. Okay. So big growth year over year, but coming off a low level. Now throw up the next one. This is just showing you all the different days. How about COVID? Like, this is what people, I think it's easy to not understand about what happened in 2020. Like, those comps were crazy. 32%.
So this is a year-over-year growth. So despite that amazing, the sheer amount of money spent during COVID, it still went up. It went up again the next year.
Topping. Yeah,
they keep topping it.
So I guess that's my point. It's always going to be a record, and these stocks and the market knows it's going to be a record, and they know it's going to be good news. But the stock still kind of moved on the news yesterday. Anyway, we talk about what a great discounting mechanism the market is. It has its moments, right? It things like this still happen. Next chart. This is cool. I bought some furniture.
This is interesting.
It's a golf bag furniture. It's furniture on my golf cart. I bought some end tables. Furniture, actually, there's another chart that I didn't bring in that shows you what day is best for what goods. So electronics and furniture is a Cyber Monday thing. Actually, who knew, right?
That's
Wish
interesting.
I had this data yesterday. And then one more, the next chart. So it's growing in every category. Now, this is a big one. Even the buy now, pay never trend just won't stop. I think this is super dangerous and really bad and probably doesn't end well. And all these stocks probably go away one day because if Amazon or Apple want to be in the buy now, pay never business, they'll crush these guys in a minute. It's just not a business I think they want to go too hard into. So then you have charts like a firm. Let's talk about a firm. This is one of the poster children of the BNPL. It's an acronym. Buy now, pay later. JC, do you ever pay later?
I don't
say,
know.
"Oh,
I don't
boy,
even know what that means. What does
I
that
would
mean?
love to pay 30% interest. I'll just pay later." You don't do
Is
that?
that what it is? So you don't like you get something like you get like a pair of shoes, but you don't have to pay until later, and you pay 30%.
You don't
interest?
see it even on Amazon. The
Do I
option
see it?
Yeah,
for installment payments on anything. You could buy a book for $15. It's offering you like an installment plan.
I mean, I would never do it. I would never do that because I'm not terrible at math. But so maybe my brain like just doesn't see it. You know what I mean? Like it just like avoids it because
Yeah.
like it's so
there.
stupid.
On the right-hand side of the screen.
Who's
Right.
gonna pay 30% interest? What kind of
Wait,
idiot is gonna do that?
I have a dumb question. I thought a firm's whole thing was they didn't charge crazy interest.
Okay, then it's just not a viable business.
What that therein lies the point, right? So, this is not a new business model. Rent-A-Center does this. It's called a layaway. It's been around forever, right? Like they do charge interest, by the way. But I thought a firm
bigger ticket items that I guess
yeah.
financing makes more sense for. They're also like furniture, stuff that you really need. This is the new buy now, pay later craze is encouraging people to buy things that they don't need anywhere and basically create some sort of payment plan. So that
The move is to use your Amex and get the points.
Okay.
That's the move.
Wait, is it Snay in the chat? Says there's no interest unless you miss a payment.
yeah, and then you probably get absolutely slaughtered.
Yeah.
I
don't miss a payment. I see it every time I go to book a flight. They're like, "Do you want to pay this over the course of 12 months?" And I'm like, "No, I would not. Actually, I would like to pay for it today."
There are a handful of stocks that when I'm scrolling through my internals dashboard, I literally just ignore because I just hate the fundamentals so much, and it's just something I would never buy. This is one of those. I just can't ever wrap my head around this business.
But the chart speaks for itself.
Though.
Now.
It's a nice base.
Disaster waiting to happen.
Yeah, but can you wrap your head around one of these Chinese internet scams that we're buying all the time? Like, what's the difference? Who cares?
I don't buy them all the time. And I actually sold all of my Chinese stocks from my long-term account a couple months ago. I'm happy to trade these things when their base is complete.
What's up with this Pinduoduo?
I was just going to say I'm long Pinduoduo and I'm long VIPs.
Isn't that a Chinese internet scam?
And I've been long Tal for like
explain to me how you wrapped your head around the Pinduoduo. You can't even spell the freaking stock name.
What I don't like about Pinduoduo,
and that's my point, right? Nobody could spell it, so they just changed the name to PDD Holdings. You notice?
Yeah, they're like we can't make people keep trying to say this. The thing about this one that worries me is they are allowed to operate in America, and you know it's not that Chinese goods and services are not allowed in America, but it's that by the brushstroke of a pen, we can ban them, and we do, and that typically happens in the tech space, right? And all the other online retailers are not allowed in the U.S. So this one, there's just a monster risk that you wake up one day and it's not allowed in America anymore. And I think everything changes, and this chart looks a lot different if and when that happens. So that kind of scares me. I am long, but it's a trade, not an investment.
The less I know about the company, the better.
Yeah, they had earnings this morning. I don't think you want to know, JC. I don't want to know either, frankly.
They didn't do well? I want to know.
No, they did do well. That's why they're up 15% today.
Pinduoduo's up 15% today?
Dude, look at that.
Yes.
Oh, wow.
Look at that. One for the good guys. All right.
It has been a great stock. It's been one of those names that we've been pulling up and looking at. JC, we've been talking about this one since last year, the base in the stock since last year. This is one that we pull up over and over and over again and say, what's different about this one? It just
but you know why? You know why? It's not even because of the base. It's because of the relative strength. It's been popping up on the relative strength scans.
Since this time last year, earlier, summer of last year, this thing looked good.
Also, I don't think that most people know that this is $160 billion company. Like, this isn't like some small cap, nothing burger. This is $160 billion. Like, this is a monster company.
It's making moves to be by far the biggest in China, right? Who remembers Alibaba? That was fun.
What do you mean? Who remembers it? What happened to
Alibaba used to be far and away the biggest company in China. No one would ever come close to their size, right? And that's just not
Tencent 400 billion,
right? So Baba's been passed by Tencent already.
Tencent's been the biggest for a long time.
Well, it wasn't listed in the U.S., and I don't think so. I think Baba was bigger when it first came out. I don't know. We'll have
to. I think they're neck and neck. In they're 1-2 regardless. But
either way, Pinduoduo looks like it's going to pass both of them.
Why don't we end this conversation on these Chinese stocks? Although that Pinduoduo, we've been all over it. It's working well this morning. One for the good guys.
Well, I also let's show other online retailers quick too.
No, hold on. Let's bring in Krutzky.
We didn't finish this.
Well, let's see if Jason has thoughts. How about that?
Kill
two birds with one stone.
Me as the type of gentleman that would appreciate a good Chinese tech stock.
It's not just China; right. It's the other online retailers, ex-US.
Mercado Libre
looks great.
I know,
really good.
All right, here we go.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Good morning, gentlemen.
Jason, what's up, my man?
How are you guys?
Just enjoying a nice little bull market. Nice seasonal tailwinds here. Sentiment super bearish. S&P 500 is up over 20% this year. NASDAQ 100 returned over 46%. Dow's 2% from new all-time highs, yet investors are so sad, Jason. Why are investors so sad?
I don't know. They're probably on the sidelines is what I would imagine.
And you think that that's what skews sentiment pessimistic? The fact that they're on the sidelines and have missed it? Really?
Maybe.
Yeah. What else could you point to?
I don't know.
That would make sense. Mechanically, right? Because we look at sentiment, and when it's pessimistic, we say, "Ooh, that's bullish." Just like we would say, "Hey, there's incremental buyers," or cash on the sidelines. That's bullish. And if those mean the same thing, I don't know.
Yeah, I mean that's my instinct. That I brought a couple of things that I thought would kind of highlight that. I guess.
Sure.
Let's do it.
I like it.
Yeah, so the first thing that I brought was just a basic seasonality chart broken down by week. Spencer has it if he can show it. Yeah, so
the vertical one.
Yeah, it's very hard to read, and I apologize about that.
What the hell is this? It looks like a bookshelf.
Yeah, it does.
Looks like a really nice bookshelf.
At the top, you've got IWM, and then SPY, and then QQQ, and it's broken down by week. So it's just win rate per week, and it is hard to see, and I apologize, but I know the numbers. It's 75% win rate this week on the IWM historically over the past 19 years, 75% win rate this week on the SPY over the past 19 years, 70% win rate on the Qs this week over the past 19 years. So this and on the IWM, this is like the third strongest week of the year. This is just to point to what you guys have been saying all along. This is a very strong time seasonally. This chart or these three charts are proof of that, and things don't really start to decline until.
How far back does this data go?
19 years.
And you could see September and October. I know that's that last red bar in those bottom two charts. That's got to be late September, early October, right?
Right. And things gradually increase all the way through to the end of the year. You can see they stay pretty positive all throughout the first quarter of next year.
Go
ahead.
Well, to be clear, this is showing the percentage that these indexes have been positive.
Correct.
In these weeks, not anything about the average return.
I have average return numbers too. I just didn't want to clutter the chart even more.
Right.
But
No,
but
yeah.
but we do have them, and they're not bad returns either on the week.
So what does this mean? So Jason, what does this mean to you? So all right, so we know stock market does well this time of year, right? We have the data, it goes back forever. Short-term data, long-term data, it all adds up. Makes sense since 1950. Great. So what do you do? What does that mean? Does that mean that you're
Well,
buying because historically it does well? Like, what does that mean to you?
to me, you're buying in September. To me, you're buying in the red columns because that's when things are usually working poorly, and then you're selling into the strength that comes after them. That's kind of the way that I look at it. You could break this down a lot of different ways. You could break it down by month. You could break it down by day. You could break it down by hour of day. We have data on all of that stuff, but that's generally how I look at it. And like you said, or like you always say, what is more interesting is when the market behaves differently than the way that it usually does. And so you would be using this as a way to kind of gauge, well, if we had some monster down week this week, that would be a bright shining signal of, hey, things are not acting the way that they normally do. We should pay attention to this. At least that's how I would be thinking about it.
And you do this on Trendspider?
Yeah.
Cool, man.
Yeah, there's just one little piece. The next thing that I brought was Amazon. Figured you guys might want to talk retailers since we just had Cyber Monday. I tried to give a slightly different look for Amazon. Obviously everybody's seen this chart a million times. That 148, 150 level appears to be very important. Huge support. 2020, 2021, they lost it. Became huge resistance for the past, year and a half or so. But what I added on here was an additional piece. I ran a strategy, and the strategy is very simple. What it looks for, or what it tests, is a move like the one that we've seen over the past 4 or 5 weeks. Amazon, as of yesterday's high, off of those October lows, Amazon was up like 25%. And we are getting to it feels like we're getting to the part in the rally where investors are kind of saying, oh, it's gone too far. It needs to cool off. We're extended, And so, I test that because I want to know, well, over time, what can I expect after a rally like that? And I didn't bring all of the individual numbers, but the data is 36 times in history over Amazon's history. This is a weekly chart. So 36 times in history, Amazon has gained more than 20% in 4 weeks. Looking out six months from that time, that little blue cloud that you see that extends up and to the right, that is the average track of those 36 trades. So in the worst case scenario, over a 6-month period, looks like we pull back about to that 50% retrace from those highs, from the all-time highs down to the January, December lows. And in the best case scenario, we extend far past it. I added the fibs on there because, JC, I know you're a fib guy, and I thought that where this pattern track extends and where it finds kind of support is pretty interesting relative to the current fib sequence that we're in or trading within.
I like it. I've been looking at, because you make a good point, right? A lot of these trends do look tired. I've been waking up, looking at my accounts, looking at my watch list in the morning saying, oh my God, like, really? This is getting ridiculous. You look at some of the best stocks right now, something like Uber, it was like down 2 days over the trailing month or something. Here's what I've been doing. If they're not getting overbought, to me, they're suspect. And Amazon, I'll throw up the chart, does fall into that category. Toss this up quick. It's in the morning show chat. Google, same thing. Then you look at some of the stronger ones. They got
slide 6. Slide 6 up there too.
So during strong uptrends, during strong rally phases, I want to see overbought momentum readings. And if it's the one I put in the chat with the momentum. Yeah. If it's not overbought, I don't know. Isn't that a little suspect to you guys?
Not overbought yet.
Not overbought yet.
Dude, we've gone straight higher.
There is a bit, definitely some
it didn't get oversold either, Strazza.
Look at its peers. They got overbought. That's all I'm saying.
Well, so zoom out and then look at the one that I showed, the chart that you didn't like, right? There's a lot of market memory here.
Yeah, it's a big spot.
It's a big spot.
Not disagreeing with that at all. I'm just saying, if you had to pick and choose some, because a lot of charts look good right now, I'm going to treat the ones that got overbought a little bit differently.
How would you, what are you thinking?
Like we're on rollover alert, right? Straight higher for 4 weeks now, just
Right.
about. These trends are looking a little bit tired, right? Momentum is certainly waning. Draw some divergences. So the ones that are not overbought, I think, are more prone to bigger rollovers.
If you're above 145 and you're short Amazon, it's a death wish.
Crazy. Yeah.
Would you agree with that? By the way, on a weekly basis, we did get overbought this summer, which is more important than on a daily basis.
Oh, I disagree so much, but we need like 15 minutes to hash that one out. I disagree so much. Okay. Weekly RSI. Never make any money with a weekly RSI.
Well, historical
I don't know about all that.
Historical data says that this thing's got a lot more room in it if it wants to.
Yeah.
I like that. You do
also the space. Also the space. Consumer discretionary is one of the strongest areas in the market.
And this exact subgroup of consumer discretionary getting red hot. We were just talking about these online.
What is the subgroup of Amazon, out of curiosity?
It's an online retailer, in my opinion. I don't know. You can go check the data providers, but it's an online retailer.
Okay, but isn't a massive part of their business AWS, which is technology and cloud?
Mm-hmm.
So is it such a pure play online retailer?
No stock that's worth 1.5 trillion is a pure play at anything.
That's probably right. Right. Yeah, that's right.
You don't get that big by doing just one thing.
That's right. Yeah, that's right. Google, like what's a Google pure play on?
I mean, you could split these companies up into their revenue segments and put them in 3-4 different sectors.
Like Google is like a pure play on like Earthlings progressing, right? Like just like Earthlings doing things better is like just like the Google trade, right?
Dude, I was
No, it's advertising. That's all it is.
Is it though?
Google? Yeah.
Okay, what about Google Ventures?
No, there's a lot of cloud. Google's got cloud.
And what about all the cloud? Yeah, what are you talking about, Spencer?
Private investments.
What percentage of the company is advertising?
Probably a lot, right?
Most of it.
You think?
Because both search and its YouTube come down to ads, right? I guess they do sell subscriptions too for YouTube TV.
How about the fact that they have the best data on the planet that they have internally and can do whatever the hell they want with it? That's pretty good.
Yeah, that's helpful.
Yeah,
Jason. All right, Jason. What else you got? Talk to me.
I brought GDX.
Okay, I like it.
I thought the setup on GDX is pretty interesting. It's not there yet. You know, it's stuck below that anchored VWAP from the May highs. It's stuck below its 200-day moving average, but very clear, you know, textbook looking inverted head and shoulders. If this thing can break above those two big spots, that 200-day and that anchored VWAP, it might be off to the races. Not much volume above either, you know, kind of just looking at that point of the purple line is point of control. So it's kind of all of the volume from those May highs. So that's where your most buyers are located at. It's trading just above that little spot. You see this happen a lot. You see price come into these big important areas, get above one important one, get stuck just below another important one. And maybe it needs just a little bit more time to kind of tighten up and you know, maybe one more little scary move to the downside or something just to kind of correct a little bit and scare the last remainder of folks out. But I actually wanted to ask you guys about this. I know you're an ex gold bug, so I kind of wanted to get your thoughts.
Retired gold bug. Why don't you throw up? Here's my take. Throw up the slide 2 here. This is rocks versus stocks. And I think this tells the whole story. It's at all-time lows relative to the S&P 500. Money goes to where it's being treated best. And like, honestly, like it's hard to find a worse group of stocks on the planet. Like anybody who's told you to buy gold instead of stocks over the last decade is a fool.
Yeah.
Or over the last year, right? Like you make a good point. What you're really saying right now is a lot of things are working. A lot of things. And gold's not one of them. We do have markets where it's hard to find pockets of strength and you got to look really hard. And maybe you go to the gold miners or the uranium or the weird stuff. That's not this market. A lot of things are working. I don't know. I feel like you're kind of missing it if you're going digging for opportunities in the gold miners. I think the time will come but patience is key for this group right now.
I gotta tell you, man, if gold on an absolute basis starts taking out that 2100, things are really getting going, and we're pretty close, man.
Right now, with the way the technicals look, this is like a hero trade, right? You don't need to be a hero and buy something that's not working, hoping that it starts working. That's what this is for now.
On an absolute basis is another story, right? So to buy rocks instead of stocks might not make sense, but to buy rocks in addition to stocks, I think makes sense.
Would you rather buy Bitcoin or gold, Jason?
I was going to say, what about digital rocks? I would rather buy Bitcoin.
I don't buy that story that the Bitcoin is a digital rock. I think it's its own thing.
It is.
You know, we compare them, which is fine. But like that's something to do like over drinks and like happy hour. Like in terms of actual portfolio allocation, are you really gonna like hit that fork in the road? Be like, okay, with this 10% sleeve, am I gonna buy Bitcoin or gold? Like that doesn't make any sense.
No, definitely not. The other chart I brought was actually Coinbase. It's kind of it's at an interesting spot. You know, it's up 65% or something like that in 4.5 weeks. But first weekly close over the anchored VWAP from the IPO, that's kind of a big deal, right? First time our average buyer has been in the money in 2 years.
That's talking about this.
What's up with those arithmetic scale charts there, Jason? What's up with that?
What's that?
What's up with those arithmetic scale charts you bring in here? What is that?
No, that's not. That's regular scale.
Looks arithmetic to me.
We'll have to trust them on this one.
I promise it's not.
With coin, though, something interesting here. If you dropped a VWAP from the 2021 high, not the IPO high, but the November high, and then you could have dropped a VWAP from the year-to-date high from July, they both broke at our base breakout level, which was the low 80s, right? Yeah. And if you look, you had a blow-off rally in August of 2022, and then another blow-off rally in July of 2022, which is kind of creating the upper bounds of this base around 115. But if you look closer at the chart and pull up a daily, you'll see 4 or 5 touches at about 83, 84. And that was really the level. And when you got that break on 84, it was like 2 or 3 weeks ago now, it gapped through it. This was November 2nd, gapped above that level, took out those VWAPs that I'm talking about, and it's up 50% since. So I think while, yes, got to be long above these highs here, and 115 is a clean level to draw resistance at, much of the move of off this base break, I think already happened. Right?
I agree. Yeah. I agree. I think it could definitely use a little bit of a rest, but
I couldn't disagree more. This thing's just getting started.
I think so too. I think it's just getting started.
Strazza. I mean, Strazza's been all over this, but your anchoring bias right now is oozing out of you.
I own more of this than anybody. Okay, I'm rooting for this thing to just keep going. Trust me. Coinbase has been great for me. I'm not selling it. I think it does eventually go. I'm just saying 50% in a couple of weeks. Let it breathe.
That's a lot,
right?
Yeah.
Like it's been up every day. Every day I look at my account. Holy shit.
Coinbase. Throw up slide. Oh, wait.
Bitcoin was down.
Spencer.
Bitcoin was down like 2% yesterday, Jason. Coinbase is ripping still. Yeah. So like it just the price action, the tape for Coinbase has been so good.
Well, Coinbase is a lot more than just Bitcoin, right? I mean, it's the whole market of stock or whole market of coins. And who knows what they're going to get into in the future.
Which is a reason to like it, right? Yeah. If you think this is really a new bull for crypto, there's not a better vehicle. There's not. Yeah. Like you said, they're going to benefit from whatever it is. We don't know what this new crypto bull is going to bring us. Just like we didn't know last time. You can't guess at this stuff. But they'll be leading the pack and making money off of it.
If you're short Coinbase, if you're short Coinbase and it's above 115, I think it's a death wish.
I would also say pull up the relative trends in Coinbase. Chart it against the best benchmarks you can find. Coin XLK.
Are you saying that it doesn't look like GDX relative?
Coin versus the NASDAQ. This is a leader, and it's been a leader.
Yeah, 100%. You know, Jason, the saying around here, which I don't know if I agree or not, I haven't quite figured that out, is that, what is it, Strazza? Investing in micro strategies is investing in Bitcoin. Investing in Coinbase is an investment in crypto?
Yeah.
Yeah, that's
And if
sounds dead on.
if
Sounds about
crypto
right?
Yep.
And what I've been saying since last year to anybody who will listen is if crypto survives, Coinbase thrives. And you're seeing it.
Yeah.
Crypto's not dead.
Ooh, I like that. You're like a Connecticut rapper.
Been saying
You
this
need
for
it.
12 months.
Needs it on a t-shirt.
Yeah, put that on a t-shirt. Mark it up. Mark it up.
It's working. And I think, like you guys are alluding to, listen, it's already been a great trade. We got involved in January, JC, on the scoop and score of the failed breakdown. But it's really just.
Yeah, but that was a different story because in January, we were looking at all the stocks with the biggest short interest, remember? Like, that was a completely different trade than what this is, which is a very well-established base, you know?
The thesis wasn't a short squeeze, why we got into it. We wrote a
Yes,
whole.
it was.
Maybe for you, I wrote a whole
For me,
post
definitely.
we
That whole
shared in
thing,
chat.
Carvana, all the ARC
Dude.
stuff, like for me, it was all the same trade.
For you, maybe it was that. I wrote a whole big, beautiful report on why we were bullish at 40. Okay. But the point being, technically, now the reversal's in, right? So there should be a lot more to go. I think we do go back to those old highs. There's a lot more gains to be made here.
But it's a completely different type of trade. It's completely one, you know.
Well, now you're
it's
buying
another
an uptrend.
animal altogether.
Now you're buying an uptrend. You're buying a leader. Back then, that was almost more of a fundamental call I was making, right? We got the scoop and the failed breakdown, and that's kind of what sparked it and got us in. But it was a fundamental call.
Maybe for you. I'm not so sure about the fundamentals there.
I'm going to pull the post. You guys talk.
I'm sure you did it, Strazza. You want to take a, what do you want? You want some flowers? You want a trophy? Come on.
He wants
You
a
nailed
t-shirt.
it, bro. You nailed it. What do you want from me? You nailed it. You nailed it. Strazza nailed it. One for the good guys.
Make him the t-shirt with the quote on it.
Jason, what will be the worst performing sector between now and Valentine's Day?
Oh man, I have no idea. I don't know.
I don't know either. What do you think though?
I don't know. What's up the most right now?
What's up the most since when?
This quarter.
Best performing sector this quarter on a cap weighted basis is, drum roll please,
You guys are short
technology of 12.5%.
I don't know if that's going to be it. You guys are short some healthcare names, right?
We have a not so much I guess it's a bearish bet on Eli Lilly. Yep.
Yeah. I don't know.
Generally healthcare I like a lot, but Eli Lilly hasn't been trading with healthcare as a sector. It's been its own animal.
Yeah. I don't know.
It's working, by the way, our bearish bet.
That's good to know.
Yeah. One for the good guys, right?
What do you think?
What do I think the worst performing sector is going to be between now and Valentine's Day?
Yeah.
When's Valentine's Day?
Not chocolate.
February 14th. Best day of the year.
Oh.
My birthday's on February the 14th. The worst performing sector? I don't know. Probably energy.
Yeah, I could see that.
Probably energy. If the market is strong, then you're probably not going to get a bid in energy stocks and they'll underperform. That's probably right. And I do think the market will be strong into January. Mid-February kind of changes things because we're already, I think energy will have already started working. The XLE could be at all-time highs. In fact, by Valentine's Day, I think the XLE probably will be at all-time highs. So I should probably skew that. I think probably energy underperforms probably through most of January, if I were a guessing man, and then probably starts to pick up the pace towards the end of January. And then maybe new all-time highs by mid-February.
And at some point, you're going to get a big rotation where the best stocks are the worst stocks.
Yeah, right.
Months. Like it always happens, just enough to fool people to get out of them and then create some incremental buyers for another leg higher. So there will be a period where we're like, oh, tech, communications, discretionary, these are all dead. And stuff like financials and energy and materials are looking good.
What about
best sector for next year?
Me, Jason?
Don't ask me. I have no idea.
Too far ahead.
Too far ahead.
Yeah. We still got a month to go.
Yeah.
I think it's going to be financials.
I think everything changes.
Financials and healthcare.
You're seeing a massive chase. The best stocks are just continuing to outperform, actually accelerating higher on relative terms, the leaders. That is just chase behavior. You're going to see some serious window dressing into year end. Then January 1st is going to come. They're going to reverse the whole thing. I'll bet you there's going to be a massive opportunity for some catch up or some mean reversion trade. All that money is going to come out of the winners and it's going to pour into financials, materials, maybe even energy. some of the stuff that hasn't worked as well. What do you guys think?
Sounds logical.
You're talking my book.
Yeah.
Jason, where can the folks find you?
They can find me at Krutzky Trades on Twitter. I'm a point guy for Trendspider, so if anybody ever has any questions about Trendspider, never hesitate to hit me up. My DMs are always open. I'm live on YouTube a couple days a week, just doing, just being there to answer questions and things like that. So,
and you're in Denver?
I'm in Louisville, which is, overlooking Boulder. So I'm 30 minutes north of Denver. Beautiful Louisville.
Meetups and stuff?
I'm sorry?
You go to Sean's trader meetups?
He's got one right down the street next week, so I'll be at that one for sure. I don't make it to all of them, but yeah, I go.
He's really good with that, man. He really keeps up with that for years. He's been doing this.
It is impressive. I think it feeds him. I think he really seems to enjoy it. He loves the camaraderie and getting to talk with all of us traders, and it's cool to get to meet traders around here. I'm not originally from around here. I'm from Atlanta. So Sean was one of the very, very first people that I met when I moved.
Is anybody around there from there? No, right?
I don't think so. I think most people are transplants. Yeah,
that's right. So you're not alone. It's all good.
Speaking of talking with traders, when are we doing a Twitter Spaces, Jason? You guys usually do a great job putting together some spaces.
I appreciate that. Yeah, we haven't been doing them lately. I'm not sure if we'll do them again. We kind of
you're over it.
We're a little speedboat, we try things and then we say, let's try something else. And then we do something else for a while. So maybe we'll come back to those spaces eventually. We'll see. Always had a great time hosting them and always appreciated you two joining up to be a part of them. So
happy to do it, man. Happy to do it.
Good stuff.
Yeah. Cheers, guys.
Thanks, Jason.
All right. Y'all have a great day. Thank you for having me on. It's been an honor.
Bullish Coinbase. I mean, how good is that? How many of our friends are coming on here? Whether it's Craig Johnson, Louis, now Jason, talking about the coin. Everybody wants some. I like it. Hey, I'm bullish. Did you know?
I knew. I think everybody knows. Why don't you tattoo it on your forehead in case anybody's confused?
Hey, let's do a quick update here. While you guys were talking about Coinbase, Micron just randomly decided to update their guidance for the upcoming quarter or the upcoming announcement. So I saw the stock was volatile off it. It was up, it was down. I'm not sure what it's doing right now, but they did
down 3%. No big deal.
All right, so they just updated their guidance for Q1. It is not going to be below their prior guidance. So they just basically lowered their guidance for the upcoming quarter, their EPS and their revenue. So, it happens.
NBD.
What else? I know that there's more news. Actually, can we just go back to these online retail charts? Because I think some of them are just really...
Yeah, go for it.
So let's cycle through them here. Throw up the Shopify. Monster performance yesterday. Look at this base, right? So from left to right, downtrend. Follow the 200-day moving average in gray. Downtrend. Nice big rounding bottom, right? You get an automatic reaction higher off the rounding bottom. You see that nice gap. You see the 200-day starting to curl higher. Textbook retest, crumbled right back to this breakout level. If you missed it, wow, did you have another chance to get in the 40s a few weeks ago, up almost 100% past month, taking out its year-to-date highs. This one well on its way. When you look at a chart like this, the biggest takeaway should be accumulation, major, reversal in the primary trend. Path of least resistance is now higher. JC?
Canada, eh?
I mean,
but seriously, the structure here, beautiful.
It looks so easy, Steve, when you put it like that. But you had to wait. It was 6 months, right? 7 months.
You have to wait. I will continue to pound the table. These are some of the most beautiful bases I've ever seen in my life that formed last year and earlier this year. Like, you don't get them like this all the time. You get V-shaped bottoms. You get these little slingshot lows. Like, the bases here were just so well advertised. This isn't going to happen every cycle. So if you're not buying these reversal patterns and you think that you're trading on technicals, I don't know what you're doing. You should be having a field day. If you're a technician and you like big bases, I mean, they're everywhere and they're very clean, very clear. And they're textbook, right? Textbook, because you had a nice constructive basing period, but you don't always get. So I don't know. No? JC, you buying these bases? Spencer?
Yes.
Okay. Spencer, you buying?
I'm certainly in the market.
Okay.
Yeah, I've got some cash certainly in the market. Yeah, no doubt.
Is this the best? Is this the best stock in Canada?
Yeah, totally.
Yes.
Totally. Mercado Libre is next. So theme here is actually
Gringo.
XUS. Look at this one. You could draw this one differently. You could draw it like a base. Again, left to right, downtrend, monster base, right? Some consolidation there, some accumulation. Trend is now higher. 1300 was a pretty clean level. Now it's kind of in the middle of no man's land. This one's got 2000 written all over it. Easy. So this is another monster stock. This thing's huge. It's a NASDAQ 100 name.
This one, it's like 90 billion, right?
It's a big company. Is that it? 90? Is it bigger than Shopify now?
No.
No.
Mercado Libre is 80 billion. Shopify is 94.
Yeah, the rounding bottom should make you smile, Mike. I mean, as good as it gets. Here's the thing, right? Depending on your time frame, there are two just awesome patterns for traders and investors. One is people with longer time frames. It's the base. It's the rounding bottom, right? You get in as soon as that base breakout occurs. You can participate, from the 3rd to 7th or 8th inning of the trend. Get that nice chunk, right? While the trend, once the trend clearly shifts to higher, right? You use the base breakout, rounding bottom, textbook reversal pattern for that. Second one is for people with shorter time frames. You find something that's already completed a base or that's in a clear uptrend, and you buy like high and tight flags. Right? So those two patterns, you could just keep going back to the well and hitting them over and over and over again. And these bases, I mean, yeah, they make me smile too. Because once they complete, it's not telling you, oh, the stock's going to go higher for a week or two. These are monster bases, 12, 18-month bases. Once they complete, they're telling you a new primary uptrend's underway, right? You could just buy that, tuck it away for a year. Should be looking at much higher prices in a lot of these. Is it that easy? Is investing that easy? Did technicals make it that easy?
The bigger the base, the higher in space. I actually taught my daughter over the weekend how to say that, because we build like towers with like the Legos, you know what I mean? Yeah. And I have to tell her that we have to build a big, because she wants to make it really tall and really high.
You need a foundation.
So we need to build a big foundation. So she knows that the bigger the base, the higher in space. And
that's awesome.
She just runs around the house yelling that. Yeah.
Great lesson. Good dad. Good job. Proud of you.
I thought that was a pretty good one. Yeah.
That's pretty cool. Yeah.
Yeah. Can we talk about something I want to talk about now, please?
Sure.
Dolphins.
The Dolphins?
I don't know.
We can talk about the Dolphins if you want, but I don't think anybody cares.
New York Knicks down 20 points. What a comeback.
Okay.
So it's Miami.
Oh my God.
Nobody wants to talk about the Knicks. I want to talk about the sentiment in healthcare stocks.
Still on this.
This one coming in from Deutsche Bank.
See,
and its current healthcare positioning.
Firms do have good research. Anyway,
healthcare positioning, and investors are just not positioned in healthcare, as we see here. Obviously, just historically low exposure to healthcare, and then just a quick fun fact. Quick fun fact, the healthcare represents 21% of the Dow Jones Industrial Average. It represents 13% of the S&P 500. So largest component of the Dow, second largest component of the S&P 500 after tech. Nobody owns it. Meanwhile, go to the next chart. We are in a long-term structural uptrend, in case you hadn't heard, right? And then go to the next chart, which shows just this multi-year sideways consolidation that refused to resolve lower. If healthcare gets going, for me, it's more of a when than an if.
Yeah.
When healthcare gets going, 21% of the Dow, 13% of the S&P, second largest component. How do you think that healthcare making new all-time highs and rallying 20-30% from here, how is that going to impact those indexes?
I think you're asking the right question. I thought you were going somewhere else with this.
Where'd you think I was going?
Like, this is just not a pond to fish in right now. 2 year.
It's not a pond to fish in.
It's not a pond you want to fish in for long opportunities, but for information and the importance on the indexes, yeah, okay, I hear that.
So again, 21% of the index in the Dow, 13% of the S&P. Nobody owns it. as this unwinds, which historically, as we know, these lack of exposure or overexposure on the other side corrects. When that corrects, because it's not in my, I'm not betting that it's an if. I'm betting it's definitely a when. When that unwinds, how's that going to impact the indexes, huh?
Positively. And listen, this thing's going to go in one of two directions pretty soon, I think, because if you look at it on a relative basis, it looks awful. Trading just off its lowest level in 10 years versus the broader market. Really ugly. So you need some evidence of leadership there, I think, before you want to count on these stocks contributing to some gains at the index level. But it is a bull market, right? We do expect the laggards to catch higher to the leaders. We do anticipate that groups that are showing relative weakness will eventually show relative strength. That's the constructive rotation that tends to characterize bull markets. So yes, you would think that healthcare will soon have its day. But we need to
United Healthcare, which we've talked about here plenty of time, new all-time highs.
How did I know we were going there?
Largest component of the Dow Jones Industrial Average, so I would argue it's part of the conversation of weightings in indexes, considering United Healthcare is the largest, and it's making new all-time highs. So when you talk about not a good place to go fishing in, when you're looking at a place that's investors have this little exposure, and its largest component is making new all-time highs, and it's also the largest component of the world's most important index, I would argue it is a good place to go fishing in.
You're doing a lot of anticipating things that could very well happen in the future, right? It's a lot of anticipating.
Nope. United Healthcare is making new all-time highs right now.
I could pick a stock from every sector that's making new all-time highs. Yeah.
I doubt it.
Yeah, you could find them. Lind.
Its largest component. Yeah, Lind is a good one.
Lind,
we bought it yesterday. We bought it yesterday. We're in. That's great.
So stock market might make.
So you can argue that materials are not a good place to go fishing in. I would argue the materials are.
So stock market might make a good point about the healthcare, right? Because you got UNH and you got Eli Lilly, right? And you got those two clearly having very strong years, and there's not great breadth, right, in this sector, right? So,
right, but reverse engineer the bull market. We are in the midst of a 17-month-old bull market. So if this is in fact, and the reason that's important is because asset prices trend. So if this is a bull market, then chances are 3 months from now, 6 months from now, 9 months from now, it's still going to be a bull market. So if we reverse engineer what a bull market looks like, is a bull market going to continue without the participation in the Dow's largest weighting?
This is a catch-up trade thesis. You make a great point. These stocks are critically important to the broader market. They do need to participate eventually, right? This is a laggards catching up to leaders type of theme that you're hitting on, but it's really no different than what we're saying about gold miners. The only difference is that these stocks are important to the indexes and gold miners aren't. But both of them trading around lows on a relative basis. There are so many groups and individual names out there that are making new highs on a relative basis. Right. I don't know.
All right, I want to bring Kenny Glick on.
I think Lily's going to be the short of the century.
What's going to be the short of the century?
Lilly.
That's a good short. We're happy about it.
I just saw a headline that Eli Lilly's drug is better than the Novo drug. I'm not sure the difference.
And the stock still can't go up.
Sure. Okay.
I'll
play a bumper for Kenny. Yeah. What the hell?
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Is it a bull market?
The Warlock. The Warlock is in the house. Is it not a bull market?
It's always a bear market to me, baby. You're just living in a moment.
I guess in my experience, stocks go down in bear markets.
I don't know. I live in the moment. My moment is already over. ZS long this morning.
Z-scaler, fan favorite around here.
And one thing that is good about the bull market is that you get more opportunities for these dips to be bought. Right now, we're buying Captain. You guys know about this one, CAPT. Check out what this company does. I hate most stocks. This one's intriguing. They make the glass on the sides of the buildings to make virtual billboards.
I don't even have this stock on my.
Yeah. How small is this thing?
CAPT, they just came out of SPACdom, and now they're a real boy. And they went nuts last night, the last couple of days. And I'm in. Yeah, CAPT.
Oh, my God, Kenny. Oh, good
Yes,
Lord.
it's like that. There's always 3 of these stocks every day. Yesterday, we had BCRX. We're trading something called Enery this morning, HNRA. And every morning, there's like 5 of these stocks, and it's been, 30 years. And it just never ends. And
Kenny, these are, you can't talk about this, Kenny. These are
$5
$50 million stocks.
I mean, but they're fun. These are the pre-market.
I know, but nobody with any money can trade these things. You can't talk
we
about
could
this
trade
stuff.
them. We could
You
trade
can't
them.
talk
We're day
about this
traders. We're day traders.
Yeah, but it doesn't trade.
Doesn't trade 2 million shares. I got 15 million shares on the other one.
Do you have T-shirts that say SPAC Daddy?
I want one now. I didn't even know SPACs were a thing still, but you know what?
Me either.
Once these stocks wake up, and again, I just trade them. Again, I am the classic day trader again. None of these stocks mean anything to me. They're just prices.
To Kenny's point, it traditionally doesn't trade, but today it's traded a ton. So there's plenty of liquidity today. So all right, that's fair.
Oh yeah, I don't. 2 days from now, I won't even know this stock. We're just singing. We're singing Ermin and the Enery the eighth. I am. I don't know. The stock broke 250. We're in because when stocks break 250, they tend to go crazy. And after HKD, I don't know if you guys remember HKD. The stock was $8. It went to 2,500. That's a real price. Yeah. So that's why
that was recent. That was like a couple months ago.
Yeah, a couple of months ago, and then they eventually go back to zero. That's what's fun about them. Okay, I mean you couldn't get a short off on those, but these are what we play with. When there's not much going on, and right now, to your point about this bull market being 17 months old, we're in a little consolidation stage right now. It's kind of dead. The market doesn't want to go down. Volatility's done, and we're just looking for some action. There's your action. So again, you had the ZS this morning. That's our payday. I always trade earnings reversals. And then we find these weird, crazy $3 stocks that are just ripping all over the place. It's a day trader's dream.
And there's liquidity there, to your point.
I think, straight higher in a lot of these leadership groups over the past month, there's got to be some give back here. Little throwbacks, a little bit of corrective action for the next week or two, I think would be really nice. Set us up for a ripper into Christmas.
Right. But the new down is slightly up. It's like we can't.
Like yesterday, Strazza was like, "Oh, the market was down yesterday." I'm like, "Was it though?
Was it right?"
No, you're right. The best stocks just sideways.
The freest money was UVXY was actually in a 3-week uptrend, which is almost unheard of.
Explain to us mere mortals what a UVXY is.
Ooh, UVXY. A lot of people misinterpret the product. They think it's just a leveraged VIX. It's more than that. It's basically S&P futures being bought, and it's an ETN. It's built to go down. So it tries to give you the moment of fear. So the market was in absolute fear going into October. People thought, oh my God, is the Christmas rally not going to happen? And you were trending up. The stock, once it starts to correct, it drops in 20-30% increments. So it's one of the easiest stocks, or it's not really a stock, it's one of the easiest shorts. But more importantly, when it starts to collapse, that's the all clear signal that the volatility is falling. I call it the Illuminati put buying. The Illuminati stop buying puts. They're telling you, okay, it's time to get back in the market. And if you see when UVXY tanked under that 19, it immediately fell to 17, and then it was game on. Then when you had the Fed, and once the Fed did spook the market on that Wednesday, we've been in a 3.5-week monster rally, and UVXY gets crushed every day. And if you want to trade it, you could trade UVXY short. And then there's another stock called SVXY, which is expensive. It's a $97 stock, but that goes up when UVXY goes down. So again, these are just day trading. These are old school day trading. I'm back to being, the 1999 trader. I live for the day. I trade for the day. And then I just, again, look forward to tomorrow.
All right. I like this topic. The mechanics though, how are you executing? You're not actually shorting UVXY. Instead, you would go long SVXY, right?
I do a combination of both. And what's really exciting about UVXY is that they have options. So UVXY is a disintegrating product. Yeah. Options are a disintegrating product. Yep. You can sell, and again, it's not as scary as it sounds, naked calls. It's a very dangerous endeavor when you're doing it with stocks. This is not a stock. So I sell out of the money naked calls on UVXY. You're selling a disintegrating product on a disintegrating product. It's hard to lose. I was selling $41 calls for January at $2.12. They're 9 cents now. For this, if UVXY was to ever to go to 40, we're all dead. So the chances of losing on that trade were just.
How often do they do the reverse splits?
Basically, when it's languishing near the $5 range, they do the reverse split back.
How many?
Back up to 35, and then you start shortening it again.
They do like a 7 to 1.
Yeah,
the last one was in June, 10 for 1.
Right. Yeah.
And Kenny, they announced those, right? So it's not a surprise.
Oh,
to
no, they announce it, and it's the holiday season all over again. We all just wait for the reverse stock split. And guys, if you look at the long-term chart, you see what I'm saying. That's a real split adjusted. I think it's 24 billion or maybe 2 trillion after all the splits. No, but again, it's more than that. It's more than just free money. It's a great indication. Like, for instance, as a perma bear, I'm always waiting for the market to roll over and die, especially after 5 weeks of going up.
And why are you such a perma bear, Kenny?
It's just, it keeps me on my toes. You know, I like being skeptical and cynical. You know, that's a 30 years later. Yeah.
That's a better reason than, I don't like the president, or the consumer can't afford anything, or all these like the yield curve guy, It's fun. That's a legit reason. I have to go QC on my toes. Like that's valid. I respect that.
We'll accept that. Most people, it's just because they're sad or lonely or miserable. Or,
Kenny, if you know Kenny, it's not any of those.
I am sad and lonely. But right now, the ZS trade is why I do enjoy a bull market. But at the same time, I like when stocks go down so that we can buy them. You know, I'm rooting for a market correction now so I could get back into the Qs. I'm out of the Qs from 362.50. I feel lonely right now without the Qs in my life. But I'm not buying them up here.
No diamonds these days?
No diamonds, no Qs. But, you give me a ZS trade. And right now, ZS following through for our traders. They're all still long the stock. VWAP and multiple time frame VWAP. Let me give a shout out to Brian Shannon again.
Shout out, Brian.
Brian has changed the way that I trade. Multiple time frame VWAP is the most amazing thing to start to watch because you see the manipulation of the market. That is a great book. You should all read it. Zach Hurwitz and Brian Shannon changed the way I look at the market, and also confirmed, if you want to call it a conspiracy theory, that the market is rigged. It's rigged to price. And when you just trade price and around VWAP, you see the rigging and you just use the rigging back at it. And again, how do you beat the machine?
Is it rigging? I know, but is it rigging, or is this just the dynamics of the market because
market mechanics?
Yeah, it's market mechanics, not so much rigging.
I think it's fair to say it's rigged in many ways.
It's the price. Yeah, exactly. When I see stocks go from one price to an exact price, like if you look at the ZS chart, if you guys use multiple time frame, yesterday on the collapse, it held the 1 month VWAP almost to the penny. I don't think any of those are coincidences. They're real specific prices. Quant firms are using VWAP and multiple time frame VWAP to do their trades, and we just follow the money. Again, when I teach people, I say, look, you don't have to be the shark. You can be the little dude underneath the shark picking up the scraps, and that's good enough to make a living. And that's what we do. Again, you don't have to be the hero that buys on the dip hoping for the best. We just wait for VWAP to tell us, okay, now it's a safer bet. Let's get in here and make our money like on the ZS trade. Because now what you're looking at now, if you guys see my charts, I don't know if you see this, but this is as simple. This is as simple as it gets. I don't know if you guys see my chart.
I do see it.
So basically, your 1 minute VWAP this morning was down here. That's our buy signal. The orange line is prior day VWAP, right? So what we look for is that more or less that retracement. So stocks that are gapped down big tend to retrace from, if they get through the 1 minute, they tend to get to that prior day VWAP. Look how it nailed it to the penny on the first move. Comes back, it gives you a chance to get back in, and you get a second move. That's why I love trading around earnings reports. You usually get 2 to 3 moves in the same stock. And,
by the way, just for those of you who are new, it's not like Kenny's cherry picking this particular situation. Go chart by chart. You see this intraday again and again and again, particularly the 1 and 2 day VWAPs. I mean, man, it's uncanny. It's not the rigging, it's the way the market behaves, right?
Yeah. Absolutely. Take a look at just this crazy stock, Enery, right? I mean, this one, you're just the prior day VWAP and today's VWAP are one and the same because there really hasn't had any motion up until today. But if you're just trading around the VWAP, it just gave you another reason to get in, and it defines your risk. So if you're buying its little breakout from 323, you can use the VWAP. And if you're, again, any trade you put on, if you can say to yourself, hey, look, I'm buying here at 323, the VWAP's 11 cents away, boom, that's my risk. I'm risking 11 cents. So 1,000 shares, you're risking $110. Next thing you know, this thing pops another 50 cents, $100 risk, $500 trade.
What other stocks on your radar for today?
Let me just add some color quick about the VWAP and how it's used and why this is working. Kenny did not invent this, right? This is the go-to tool for institutions forever. I used to work in the fund. Our prime broker would send us a statement at the end of the day, all the stocks that they bought for us. There'd be 2 numbers on it. Where they filled us, the average fill, and the VWAP.
Right.
That's what they're using to get monster institutions into and out of positions. So like you said, being a little tadpole or whatever beneath the shark, that's what this is. It's exactly.
And by the way, they're using it they're not using it for execution. They're using it as a gauge to rate how well they did in executing the order.
Right.
It's like a benchmark. It's a benchmark.
Right. And there's
which is why it serves as support and resistance, right?
Yeah. There's a lot of different ways. Originally, I used to just look at trades, stocks that were underneath the VWAP the entire day. The idea is that the trader that's trying to beat the VWAP, as long as it's underneath the VWAP the whole day, he's accumulating. And they're like, okay, great. So if you get a late day VWAP break, think of that institutional trader chasing his trade. So if you get a late day VWAP break, they still have to keep their average price under the VWAP. So I love the late day. That was the OG VWAP trade, just looking for stocks that were just hanging out underneath all day and then breaking at the end of the day.
It's like a squeeze, like a type of squeeze kind of.
Yeah. And again, it also just keeps you focused. If you just, it's very simple because it's usually just 1 or 2 lines on my chart and it cleans up everything else. It takes the guessing out of this whole game. But you want to see something else I'm looking at? Well, I was looking at a firm, and again, I also use VWAP as a confirmation bias. So I came in today, and I love this stock. We were long this one. We did some actually swing trading. I'm not a big fan of swing trading. We killed it, and I've been looking now for a reason to short it. So again, I'm not coming in thinking, all right, I'm shorting this just because it went up. That's how you get your ass kicked. I got crushed short in the Qs about a week and a half ago, but confirmation bias, I came in looking to short a firm. Here's the VWAP break. There's the new low break. So I'm shorting it right here at 29.85, using the VWAP at 30 and the top of the day as my stops. Risk defined, pulls back to the orange line. Next thing you know, you got yourself a nice trade. So risk, again, confirmation bias is not a lot about what VWAP means to me. Because I could come in with a lot of dumb ideas, like the idea that this market's ever going down again. It's never going down, apparently. So one of these days when we have a blow off top, when we roll over and we're breaking down under multiple time frames, then I'll get a little bit more bearish again. Right now, we're just in this consolidation phase. So I'm just doing less. And again, this is not the market to be really aggressively trading right now. It's just more or less consolidating.
Well, I don't know about all that. I think you could be pretty aggressive if you want to be. I think there's places to be aggressive and places to not. Like you were, the Z-scaler this morning. That was quote unquote an aggressive move.
I should use maybe a different way of phrasing it. That active. You could be aggressively buying ZS for sure. Yeah. But this is not a market where I'm feeling that I need to be active, especially in the middle of the day. We're just the consolidation. We're kind of just, we're going into a slumber in the middle of the day. And that's what bull markets look like. We're just consolidating these gains and we're probably going to be ripping into the end of the year. We all know.
JC, that's what I said. You asked what I thought about the VIX being so low. I said, slumber, same thing.
We're simply talking about,
but it's not that. It just means that we are in a low volatility regime. So we want to incorporate the strategies that are best for low volatility regime
on our time frame.
Yeah.
That's right.
I'm ready for recess.
Hit it, baby.
Kenny, you want to stick around for some recess?
Yeah, Kenny, stick around. Stick around for 2 more minutes.
Yeah, man.
Hit it.
All right.
Well, since we have our friend Kenny Glick here, I'm going to throw him under the bus. I invited Kenny to come and join us at the Dolphins New York Jets game last week. Myself, my wife, Baba Booey, Snooky, we were all hanging out. We're having a great time. And Kenny didn't show up. Why? His friends were going because all the Jets fans gave up on the season.
We basically we're rooting for them just to disband. At this point, it's done. They are cursed. Please, I don't want Aaron Rodgers back. I don't care if he ever let him retire. We're completely disgusted at this point.
He's coming back for the playoffs. I heard.
Yeah, the playoffs, right? Yeah, it's just so horrifying that. And when people had season tickets, none of us went to the game. The first Friday game ever, nobody went. So
and they're the only team to beat the Eagles this year. Fun fact.
Yeah, I know. It's just so nuts. But yeah, thanks for the invite, by the way.
Right, should have come. The food was awesome, by the way.
I heard.
Shout out to the WinBet Green Room. They call it the Green Room, even though there are more Dolphins fans in there than Jets fans. The Green Room, excellent food, carving stations, open bar,
nice.
Fantastic. Highly recommend.
Cool. I'll bet you're glad that you didn't do a double and head to Madison Square Garden after the game.
You know, the heat really blew it. I was really trying to convince my wife to go. She had 0.0 interest in going to the
New York sports. Just no good right now.
Yeah,
All
Kenny, no good.
I got a good one that Kenny was alluding to earlier. I'll keep it really fast. How many do you guys all know somebody in your life who simply doesn't participate in the stock market because it's rigged? Do we all know that person?
Oh, because it's rigged. Yeah, probably.
Absolutely.
I think it's go for it.
Good. No, good.
I think it's so important to teach that lesson to people, right? Yes, it's rigged, but to not participate, you're just screwing yourself, right? Understand that it's rigged. Try to wrap your head around some of the ways that it's rigged, and then figure out where you fit in that world, right?
I've got people in my family like that, some cousins, and they think that like the man is against them and it's rigged against the little guy and all this stuff, and but they also have crazy other conspiracy theories too. So it's not like just that. They're like conspiracy people.
Fine. Yeah, you're probably right. Yes. But it's such a dangerous and just sad thing to do, right? Say, oh, I'm just going to walk away. No. Understand it's rigged. Be okay with the fact that it's rigged. And then know that you can still participate in a very positive way and make money in a rigged market. And that's fine.
Yeah.
That's what I love. That's what I love mostly about what, again, my attitude towards the market. I accept it's rigged. I use the rigging, what I believe is, an example of how it's rigged. But speaking of rigging, I call it the Rappaport indicator. My uncle.
Oh, yeah.
My uncle, Rappaport indicator. So when I was a kid, he was complaining about how the market was rigged because he just got in the market crash in 1987. He's like, I'm done. This market's rigged. Never getting back in. Next thing you know, I was a stockbroker. He's calling me in the year 2000. He's calling me in the year 2000 to see if Cisco's a good buy. I'm like, Unc, the stock was $8. It's $88 now. Now you want to buy it? And next thing you know, the market crashed. And what did he say? Oh the market's rigged. This is awful.
Right.
And he stayed out of the market for 10 years. He got back in. Next thing you know, it was 2009. He gets back into the market. So now he's been one of those guys that every time he gets in, he gets annihilated. So he just his default that it's rigged against him. It really does seem that way. And by the way, if my uncle ever does call me again to buy stocks,
tell us.
Everybody know.
Tell us, please.
Tell us. Yes.
Yeah. So he's just awful. But he's now 100% convinced that it's rigged against him personally because he's that guy. And we all have that guy in our family, or you know him.
All right.
So kudos to you. I applaud you for teaching that.
By the way, last thing before we run, we all have our contrarian indicators. He has his uncle Rappaport. I've got some people who I know personally, high school friends. I also have a contingent of people on Twitter that are excellent contrarian indicators. Here's the key, though. Don't tell them. You can't tell them.
That's right.
Don't call out your contrarian indicators on Twitter. You can't tell my grandmother that she's the best contrarian indicator ever, or you'll lose the data. So just keep it to yourself. Tell your local your friends that trade with you or whatever. Share the information amongst yourselves. Just don't tell your contrarian indicator that they're a contrarian indicator. Keep it to yourself.
Once you spot a man's tell, you never say it.
That's it.
Just like a young man coming in for a quickie.
Okay, Kenny. And on that note, we are done here. Guys, follow Kenny on Twitter if you want more of his trades and shenanigans at the Warlock. Kenny, thanks for hanging out. Guys, we're done here. We are going to hop. It is past 10 o'clock now. CRL or Chart Request Live at 1 o'clock today. I will not be there, but JC will be there, and that's all that really matters. So you got that going for you. Strazza, not sure if you're doing spaces. If you are, you're kind of running solo on that. So you'll figure it out.
We are.
Yeah, okay.
I need the login info.
What time?
Okay.
JC is going to join me. It'll be a good one.
All right.
What time?
11 a.m.
I have to check my schedule.
Okay.
Schedule?
You do that.
JC,
right,
gonna be great.
Thanks to Jason. Thanks to Kenny. Thanks to all of you in the chat for hanging out. Go make some money. Have a good rest of your day. We'll see you guys later.
Adios.
Bye.
I can't take no loss. I don't even know what it costs.